I talk to a lot of investors who are interested in getting started in multifamily apartments, but they want to know if now is the right time. Short answer, absolutely. In fact, I'm going to give you 7 reasons you should be investing in multifamily. The first reason you should be looking at multifamily is for the cash flow. Now, cash is king and cash flow is absolutely where you want to focus. There are other benefits that a lot of investors will rave about, and certainly they are important, but cash flow is the most important thing first and foremost. And here's why. Without cash flow, you may not keep that apartment very long. See, cash flow is the money that's left after all of your income comes in, paying all your expenses, paying the debt service. That money that's left, that is your cash flow. And cash flow is important because without it, you may not have enough money to pay the bills. Now, this may seem pretty common and pretty typical, but I can't tell you how many people miss this because they focus on some of the other benefits like appreciation. Those things are great, and we're going to get to that in a second, but cash flow is what pays the bills. And you have to focus on cash flow first and foremost, because as investors, we want to put our money to work for us to come back with some friends. And that's what we're looking for when we invest in these properties. I invested with the group on a 104-unit apartment community in Louisville. And this was a deal where we had an 8% preferred return. And what that means is the first 8% of profits were going to go to our investors before we as the general partners took any of the profits ourselves. That property had really strong cash flow, so we're able to pay our investors and kind of keep our equity as well. As investors, you want properties that are going to pay you cash each month. And if you're investing passively, you certainly want deals that are going to do the same. So cash flow is the first thing we're looking for and the number one reason you should be investing in multifamily apartments. The second reason is appreciation. Most of us understand that over the long haul, properties tend to go up in value. So that is the reason we invest in these properties. Not only do they deliver cash flow, but over the long term, they are wealth generators, okay? These things produce massive amounts of wealth, particularly if you know how to operate them and keep them going. So this is the second reason people look to invest in apartments. To give you a quick example, we bought a property in Florence, Kentucky's 81 units. It had okay cash flow, but really we were able to drive up the value of this property by pushing rents and implementing our business plan. And through that business plan, we were able to drive up the property's value, almost doubling it. So this is one of the things you can do when you talk about appreciation. It's a combination of letting time drive up the value, but you can also force appreciation by implementing a business plan where you're going to make that property worth more. So that forced appreciation, those are the things that you can control, but that natural appreciation, that comes from the market dynamics and what other properties are selling for. And it's the second reason you should be investing in multifamily apartments. Let's move on to number 3. Now, third reason I just alluded to, right? But when you talk about properties, for anyone who thinks appreciation isn't a real thing, well, think about it this way. If you were looking at a property in today's money versus 50 years ago, that property is certainly going to be more expensive today than it was 50 years ago, because over the long haul, properties tend to go up in value. Now, from year to year, it may change, right? They certainly may go down in 1 year or 2 years, but probably over a 10, 15, 20-year period, it's almost guaranteed that the properties go up in value. I don't like to use the guaranteed word, but again, over a long stretch of time, assuming it's a similar neighborhood, it tends to go up in value. So with that said, the third reason you should be looking at apartments is they are amazing fighters of inflation. And the reason for that is really simple. These leases for these apartments, they come up every single year. So as the market changes, you can charge more in rent. So you're always present with the current state of the market. Now, in other commercial real estate assets, you may not be able to do that because you have a 5-year lease or a 10-year lease or a 3-year lease. But a lot of times in those commercial deals, you kind of have those parameters set in stone. So it's not necessarily keeping up with inflation real time. But if you go back to 2020, 21, 22, where the rent prices are going up crazy and inflation was going up crazy, multifamily apartments were able to keep track because those leases were expiring every month or every year. So you were able to stay on top of that real time. Other asset classes don't give you that same benefit. And this is one of the things we love about multifamily. Not only do you get cash flow and depreciation, but it's a great hedge against inflation because you are able to get these leases that renew on an annual basis so you can stay on top of the current market values. All right, reason number 4 you should be looking at multifamily apartments is for all of the beautiful tax benefits. Now, here's the thing. Some people look at it and might consider it loopholes or unconstitutional, or whatever the case may be. But here's the reality. The government wants us to invest in housing. We know what government housing looks like. And I don't know a whole lot of people that are excited about staying in government provided housing. Okay. So instead, they turn to the private sector and say, listen, if you guys take care of this, you provide housing, you provide homes, you provide apartments, then we will give you a tax break. And that is exactly the incentive the government has put out there. So as a real estate investor, particularly in multifamily apartments, you are getting a tax benefit that is better than what you could get as a W-2 employee. So it may not seem fair, but you have to understand the psychology behind it and why those incentives are put in place. The government wants us to provide housing. So as a private sector, we're the ones that are in charge of it, not necessarily the government. So with those tax benefits, there are ways to take advantage so that it is great for you and your family. One of the best things that's out there is something called depreciation, where you can depreciate the value of the asset over a 27.5-year time frame. So with that, there's this thing called bonus depreciation, which came back in 2016 and 2017. And it was a great opportunity to take all of that depreciation, and instead of taking it over the course of 27.5 years, you can actually accelerate it and take it all in year 1. So for a short period of time, those benefits actually start to come down where you were not able to take the 100% bonus depreciation, but that is now back in play. So as investors, these tax perks have actually gotten even better. So it's a great time to be investing, particularly if you're trying to reduce your tax liability. There's a great quote. I can't remember who said it, but he said, listen, I'm happy to pay my fair share of taxes, just not $1 more than that. So it's the same mindset. As investors, take advantage of the programs that are out there, take advantage of the incentives out there. They're there for a reason. They're there to make sure that the private sector is providing housing, taking care of these things so that the government doesn't have to do it. Don't look at it as a loophole. Look at it as an incentive for you to provide quality housing for those who need it. I'll give you a quick example. One of the things that you can do with that bonus depreciation is you can actually take the property and do this engineering study. It's called a cost segregation analysis. And through this cost segregation analysis, you can actually reduce even further how much you are paying in taxes because you're accelerating some of the components of that property. Now, we were able to do this on most of my properties. And typically speaking, we're able to take our investment amount, so our equity, and about 50 to 80% of that, we're able to get back in a paper loss based on these tax benefits that are out there. So essentially, again, the government has given us the ability to go out there and invest in these deals and write off the paper losses. Even though these properties tend to go up in value, even though these properties are cash flowing, we're recognizing that they do depreciate over the long haul, and we're able to take that depreciation up front. There's some phenomenal tax strategies. You want to make sure you've got the right CPA who understands these tax strategies and can help you navigate your own personal financial situation. But these are some great benefits and another reason you should be investing in multifamily. All right, next, these are tangible assets. And this is something I love because when it comes to other investments, a lot of them are either paper assets or digital assets. And there's nothing wrong with that. But there's nothing better than a brick and mortar property that you can see. You can drive to it, you can see it. It serves a real function. It's not like cryptocurrency or even stocks where, you're supporting a company. But in this case, we're talking about something physical, right? With that, it's not replaceable, meaning it can't be lost based on somebody hacking into a system. There's certainly other things you need to do to protect yourself, but the property is physically there. I just like the tangible nature of that. There's something to be said about having a tangible, physical investment as opposed to some of the digital assets or some of the paper assets that tend to get traded more easily and frequently. The physical asset requires a little bit more patience, which could be a pro or con, but it's not as reactive. Sometimes you can look at your stock portfolio and see you're down 10% or 20% or 5%, and maybe it makes your heart skip a beat. You really don't have that same kind of reaction here. It's never too high, it's never too low. The value of your real estate only matters on 2 days: the day you buy it and the day you sell it. So every other day is just a day in between. And my goal as an investor is to make sure we control that second day. If you have great cash flow, you're an asset that's going to appreciate, you could control when you sell that asset. And that's the thing I love about it being a physical, tangible asset, as opposed to some of the digital or the paper assets. You have very little control over those investments. And that actually is our next one. All right, it's control. As investors, we want the ability to influence the investment. Again, with paper assets, with digital assets, you really don't have that. You're really beholden to someone else to hopefully make good decisions, invest in the right products, put together the right marketing plan, and pray it all works out. In this case, you have a lot of control when you own the apartment. You can decide what renovations are needed. Where are you buying the property? What are you doing leasing wise? Are you doing concessions? Like, you can actually run this like a business yourself, as opposed to it just being a paper asset or digital asset where you're really hoping the market lifts up your investment. So I love the fact that you have control. You can influence what you do, what the units look like, what finishes you put into the property, how you manage, what concessions you offer, all the customer service things you can do. I love the fact that you are the boss, you have control. And that is a thing that every apartment investor should relish, because you don't have to just sit back and pray and hope that things work out. You can actually take action and do something about your own investment. And that leads us to the last thing. Maybe you love everything I've said, but you really don't want to be the person handling the day-to-day responsibilities. I don't know anyone who ever woke up and said, you know what, I want to be a landlord. It doesn't happen, right? We get the benefits of real estate investing, but most of us don't want the headaches that come along with it. So instead of investing in owning the property and managing it yourself, you can invest passively. Now, there's two ways of doing that. One is where you actually own the property yourself, but you outsource the work. You hire a property management company or your property manager, and you let them do the work. Now, you still have to be involved in a lot of the decisions, because you've got to manage the manager. And if something happens with that manager, you are still ultimately responsible for your investment. So you got to stay on the hook. You got to stay involved and make sure people are doing what it is that they're supposed to be doing. The other way is a little more hands off. In this case, you can invest with a group like ours through an apartment syndication. And in this way, you invest your money, but we as a general partnership team, we go out and do all the legwork. We will find the deal. We'll hire the property management team. We'll manage the management team. We'll oversee the asset. We'll oversee the business plan. And you will share in the upside as our partners. We've done this on over $150 million worth of apartments. And this is a great strategy for anyone who really wants the benefits of investing in real estate, but none of the headaches that are associated with it. This is truly a passive investment, because your work comes up front in vetting the deals, vetting the operators, and vetting the opportunity. But once you invest, your hands off. So if this is something that is interesting to you, you should check out our free guide. It's 7 questions you must ask before investing in apartments. And if you have any questions, make sure you check out our website. Go to casmancapital.com. We have plenty of free resources there. And don't forget to check out all of our videos on the Multifamily Insights podcast. 3 reasons you should not invest in apartments. All right, so I gave you 7 reasons you should invest in apartments. I got to give you the pros and cons, right? So let me give you 3 reasons you should not invest in apartments. 1, they're expensive, okay? Apartments can be very, very pricey, especially when you consider it compared to a single family house or the stock market or other investments where the entry point is a bit more nominal. Depending on the size of the apartment deal you're looking at, you're probably looking at least 6 figures, if not 7 figures, to invest in these deals. So if you don't have a whole lot of cash on hand, apartment investing may be a tricky place to start. The good news, though, is if you have some money, you can invest passively in these syndication deals. Typically, you're looking at a $50,000 minimum investment, but it really depends on the deal and the operator. But if you don't have $100,000, $200,000, whatever it is saved up, you can still get in on a smaller nominal number if you are sophisticated or accredited. So if you don't have a whole lot of cash, that may be a hindrance to investing in apartments. The second reason, maybe you're not a people person. Maybe you're not interested in dealing with tenants or dealing with contractors or dealing with all of the things that come from where people live. I mean, at the end of the day, this is a service business, and a lot of people forget that. There are real people who are living in these apartments, and these people have lives and they have needs and they expect their stuff to work. So if you're not willing to take the time and energy to make sure you're delivering quality housing to these residents, this may not be the right business for you. Yes, you can make money, but you don't want to earn a reputation as a slumlord. So instead, you may have other investments you can make, or again, consider investing passively. And the third reason why apartment investing may not be right for you is simply due to the time. Unlike other investments where you can get in and out, you can sell your stock, you can sell your crypto, you can get out of those things fairly quickly. Apartments do take some patience. It takes patience to create value. It takes patience to implement the business plan. And you are dealing with people who are on these leases. So they are contracts. So if you get a property where you have some bad tenants, you may have to deal with them for a while before you can get them out. There's a lot of government policies in place. You can't just go and evict somebody because you don't like them. There's a lot of fair housing laws. So if you're someone who doesn't want to abide by the rules and you don't have the patience to do things the right way, this may not be the right investment for you. Again, there might be other strategies where you're going passive or you're doing something else. But as an apartment owner yourself, the one doing the day-to-day job, it may not be the right fit. So I gave you 7 reasons you should be investing and 3 reasons you may want to reconsider if this is not your cup of tea. Again, if you want to learn more about the right questions you should be asking, check out our free guide, 7 questions you must ask before investing in apartments.